Have you ever opened your credit card statement and felt that tiny, sinking feeling? You know, the one where you think, wait, I didn't spend that much, so why am I $500 short this month? Most people think credit cards are just convenient tools to make life easier. Swipe now, pay later, it's harmless, right? But here's the twist: credit cards are one of the most powerful financial traps in the world. And almost no one warns you about how subtle, sneaky, and psychologically addictive they can be. By the end of this video, you'll understand why millions of people stay stuck in debt even if they earn enough, and exactly how to escape this trap before it destroys your financial future. Let's start with a simple situation. Imagine this. You just got paid. Excited, you go shopping online. You add a few things to your cart: a jacket, some gadgets, a couple of dinners out, and you pay with your credit card. No problem, you think. I'll pay it off at the end of the month. Fast forward 30 days. Your statement arrives, and you see a number that makes your heart race: $1,200. You only remember spending maybe $700. Where did the rest go? Here's the thing. Most people treat their credit cards like free money. And that's exactly the psychological trap. You think you're spending less because it's not cash leaving your hand, but in reality, every swipe is pushing you closer to a debt cycle that is hard to escape. Many people believe that credit cards are harmless if you pay the minimum or if you just use them for emergencies. But here's the problem: credit cards are designed to exploit exactly how your brain thinks about money. Let's break this down in a way anyone can understand. 1. The pain of paying versus the pleasure of spending. Cash is painful. You see the money leaving your hand. That physical feeling makes your brain cautious. Credit cards? Totally different. You don't feel the loss immediately. Swipe, sign, done. Your brain says, hey, this feels like free money. This is called the pain of paying illusion. The less pain you feel, the more you're willing to spend. And credit cards are master manipulators of this illusion. 2. Minimum payments make debt disappear slowly. Ever notice that paying the minimum feels like you're making progress? You might owe $1,000, make a $50 minimum payment, and think, great, I'm getting out of debt. But here's the sneaky part: credit cards charge huge interest rates, often 20 to 30% annually. That $50 barely touches the principal. Most of it goes straight to interest. It's like trying to empty a bathtub with a teaspoon while the faucet is still running. You feel like you're making progress, but the real debt barely shrinks. 3. The lifestyle inflation trap. Credit cards don't just encourage overspending, they encourage a higher lifestyle. Let's say your salary is $3,000 a month. If you used to spend $2,500 in cash, you saved $500. With a credit card, suddenly $3,500 feels normal. You're treating $500 you don't have yet like it's real money. This is called lifestyle inflation, and it silently sabotages your ability to save and build wealth. 4. The illusion of affordability. Here's a story most people relate to. A friend invites you to a fancy dinner. You check your bank account, $200 left. You think, I can't afford this. But with a credit card, it's suddenly $0 down. You rationalize, I'll pay it later. The problem is, your future self now carries the weight of today's choices. And your future self doesn't get a vote in the excitement of spending. Here's the deeper truth most people don't see. Credit cards are not evil. They can be powerful tools if used correctly. The problem isn't the card, it's human behavior. Here's the psychological insight: our brains aren't wired for delayed consequences when it comes to money. Think about it. Evolution didn't prepare humans to understand interest rates, compound debt, or future financial stress. But it does make us feel pleasure instantly and pain slowly. Credit cards exploit this instinct perfectly. In other words, the trap isn't just the money, it's the way we think about money. So, how do you escape this trap? Here are actionable steps. Never treat credit like cash. Every purchase should feel like real money leaving your hand. Try a mental trick. Before you swipe, pause and think, would I pay this with cash right now? Pay in full every month. Minimum payments are a trap. If you pay the full balance, interest doesn't accumulate, and you keep control. Track every expense. Keep a simple spreadsheet or use an app. Seeing the numbers makes spending real. Delay non-essential purchases. Wait 24 to 48 hours before buying anything not critical. This breaks the impulse cycle. Build an emergency fund. When emergencies are covered by cash, you don't need the card as a crutch. Understand the psychology. Remind yourself that the pleasure of swiping is temporary, but the pain of debt compounds silently. Here's the final thought: credit cards are not your enemy. But when you hand over control to them without understanding your own psychology, they quietly become a debt machine. Wealth isn't built by avoiding credit cards entirely, it's built by mastering them, understanding human behavior, and making conscious choices about how, when, and why you spend. Remember, every swipe is a vote for your financial future. Make sure those votes count. The next time you reach for your credit card, ask yourself, am I paying for something I need, or am I just feeding a trap I can't see? Because once you see the trap, you can step around it and start building real wealth instead.